Good afternoon. My name is Spencer Levy. I'm an Executive Managing Director at CBRE. I'm very pleased to be here today with Paul Boneham, Executive Vice President of Transactions with Bentall Kennedy, a good friend and client of our firm. And we're here at RECon in Las Vegas, and it is, as you can hear in the background, a very exciting scene of a lot of our friends and clients here talking about retail. And so what Paul and I are going to discuss today is we're going to talk a little bit about what's going on, a little bit about what Bentall Kennedy is trying to do, and a little bit about the Capital Market Symposium, which Paul recently attended, and that we have coming up again next spring at CBRE in Phoenix. So Paul, thank you for joining me.
Yes sir, my pleasure.
Thank you. And so Paul, tell me, what's your sense, you've been now at RECon now for a little over a day, how's the market, and what's Bentall Kennedy doing?
Well, the market is, it's an interesting time because we're retrading existing assets. You don't have the delivery pipeline delivering new product into the mix, right? There's no shortage of capital. So we're, I'll buy your property, you buy my property. We're sort of retrading the assets around and trying to improve our portfolio as everybody is with those strategic moves. We are very actively seeking to buy properties. We closed $1 billion of existing assets last year. We would like to buy another $1 billion this year, and a third of that would be retail assets, which is why we're here working the floors.
Great, and I know you've had some success recently buying some retail. Tell us a little bit about some of the things you bought recently.
We bought 13 properties in 2012, I'm sorry, 2011, and they were in Florida, Georgia, Texas, Delaware, Northern Virginia, all grocery anchored, neighborhood and community centers. And I want to say 11 of the properties were bought through CBRE, so.
Very good.
Very helpful.
Very good. So in these properties, how are they performing from a fundamental perspective?
They're performing well because, again, the flip side of no delivery of new construction is the retailers that are in expansion mode are limited principally to dealing with the existing facilities. So they're more flexible on trying to fit into an existing box instead of getting the custom order from the developer.
Sure. Well, let's take a step back now for a second. I know we're talking about the very nitty-gritty of the individual real estate, but Paul, when we were together last time, we were on a panel together talking a little bit about the macroeconomy and how that affects us in making our investment decisions and certainly affects our retailers. We're certainly in choppy waters now with what's going on in Europe, the fiscal problems in the US. How do those types of situations affect you in terms of your long-term investment outlook?
I think choppy waters will be the expectation for the next 2 or 3 years. This is not going to get cleaned up in 6 months. So you have to develop an investment strategy that addresses that fact. You also have a very low interest environment, interest rate environment. That also is a key element of the strategy. So we've spent a lot of time on strategy, zeroing in on the subsets, the demographic drivers, and the preferences, basically, of the users of space, where we think they're going to vote with their dollars and their money. So, all you can do is come up with your best strategy and implement it, and then reassess it every quarter and dial the adjustments in.
Sure, and to what extent are you seeing global things, not just the distress that's going on in Europe, but capital flows affecting your ability to be competitive? Now, recognizing that Bentall Kennedy has a huge Canadian backing, so many would consider you international capital yourselves, but how much of the market is now global in your opinion, and how is that affecting values of real estate here in the US?
Well, foreign interest in US real estate is only enhanced by what's going on in Europe. And I think that you'll see more capital being allocated into US funds, especially open-end funds. In Canada, it's the same thing. They don't have the turbulence. That's not a motivation. It's a different motivation from Canada. They simply don't have as much product to choose from, and they have a lot of capital in their funds. Again, US is the gold standard for real estate. So
the US will be like the net recipient of capital as opposed to a net exporter of capital, given the fact that we may have our own issues, but on a relative basis, we're looking pretty good.
Especially core to core plus.
Sure.
When you get into value add, people have a lot more options because they're up the risk curve, up the reward curve. They'll look in Asia. they'll look in South America. They'll be a little more pioneering with their capital.
Sure. Now at our recent Capital Market Symposium, we talked about these, you and I on our panel. Darcy Stakem hosted a panel talking about global capital flows. We had some other panels talking about fundamentals versus fund flows. Any particular topics that you think we covered appropriately, we should cover more of when we are planning for our symposium next year?
You know, I don't think you'll really know what your agenda is until 90 days before your meeting, because the world changes so quickly. As I said, quarter by quarter, everybody's reassessing the global capital markets, how their portfolio is stacking up, even their cash inflows and outflows. So I would really be making stuff up if you'll, as they say, if I told you what to put on next year's agenda.
Sure, and just one more question about our event. We certainly try to make it as successful as we can, try to keep it relatively intimate. We have the panels, we have networking, we have some entertainment options. What are some of the things about it that you like, and some things that maybe we could do more of?
I think it's a perfect venue. In my mind, it's the equivalent of a very high level conference that you would pay a lot of money to attend. And in this case, you're being very generous in endorsing it and sponsoring it. I would say I get the same utility out of going to a ULI meeting, same quality of networking, same quality of speakers. You've really stepped up with what you're willing to invest to bring the outside speakers in, as well as tapping into the expertise in your network as a global player. So keep it up.
Great. Well, for everybody's information, our symposium next year will be once again in Scottsdale at the Camelback Resort on February 27th through March the 1st. We certainly look forward to seeing many of you there. And Paul, final question, what's the outlook for the rest of 2012, recognizing things are changing on a dime, and we may not be able to do our panel topics till 90 days in advance, but what's your crystal ball look like for the rest of the year?
My crystal ball is, the first quarter was very slow. There was not a lot of product brought out. We were really sifting through a limited number of opportunities to place our capital. And in April, somebody turned the lights on, and a significant increase in both development opportunities and existing assets for us to consider. Our weekly pipeline calls are much more lively now. We're going well over the 2-hour limit in terms of what we have to talk about. So that's a very good sign. I'm breathing easier now, and I'm pretty confident this year will play out like a typical year. You'll build every quarter, and the fourth quarter is going to be a mad rush.
Great, well that's great to hear. Well, on behalf of CBRE, I want to thank our guest, Paul Boneham, from Bentall Kennedy. Great job, and we look forward to seeing you at our Capital Market Symposium next year, and certainly seeing you much more often before then as well.
Thank you very much.